If you think the real estate market is a total mess right now, well, you're right. It is. I'm here to break down the real numbers and what they really mean. Hey, everyone, welcome back. And if the market feels like a roller coaster that is built by someone who hates rides, then you're not wrong. Prices are bouncing around like a pinball, inventory disappears faster than your morning coffee, which is never good. And everyone's talking about recessions like it's the latest Netflix craze. No pause or rewind here. Today, we're cutting through the noise to get to the real story. Sarcasm, most likely included, and sanity is not guaranteed. Sorry. So let's glance back a little bit at the the pandemic. Sorry about that. Suddenly, every closet had to be a home office, pantries became fortresses, and house hunting turned into the Hunger Games. You remember that? I sure do. It was nuts. Demand spiked over 40% nationwide, which was really, really, really not healthy. People were bidding on homes like they were Black Friday doorbusters at Walmart, like back in the day when we used to do that on Black Friday. I mean, I do. Builders would had to have had some kind of cloning technology to really keep up, but instead we got excuses about global supply chains. Then with mortgage rates sliding to 3%, everyone dove into home buying like it was Cyber Monday. Prices surged a 45% national average. Wages, meanwhile, they jogged at a leisurely 25%. So picture pizza getting twice as expensive overnight, but your paycheck just feels really sorry for you. Do you remember that? Do you feel that? Are you in that? I mean, we all are. Now rates are back up near about 6.35%, which is actually down a little bit than they have been, which is great. Stay tuned for the next video where we'll talk a little bit more about what's going on with that. But buyers are less enthusiastic when the rates were half as much. Locking in a loan right now can feel about as fun as filing your taxes. So I get it. I mean, we wouldn't want to do that at the moment, although I see a change coming. Inventory is up 15 to 20% in many markets. So you might see homes popping up more and more. That is definitely what we are seeing out there. And that means a slightly less manic market, supposedly more buyer friendly. But sellers, half of them are really clinging to low rates like it's the last piece of chocolate, refusing to list. So it's still a strange game of musical chairs, but with more anxious staring, so to say. People keep moving though. Florida's population went up by 300,000 last year. Why? Because hurricanes apparently have frequent flyer miles and it's slightly less expensive inland, which makes sense. Texas is getting its own influx. So remember, real estate isn't a one size fits all. It's like patching together a quilt, so to say, except nobody agrees on the colors. Not good. So one thing that I do want to say, realtors, listen up. It's not enough to be a salesperson anymore. People need market interpreter. That's where I come in. Over half of the buyers, 57%, are wandering around in a confusion fog. Your job is to craft a map and compass, not selling parachutes for imaginary crashes. Know your local data so you can provide value to your buyers and sellers and be blunt about it. Help clients mute the static so they can hear what actually matters. Okay? That's my advice for the realtors out there. That's the advice that I'm taking. I just like to let everyone know that we are offering value of what's going on in the market, the area, all the things. So is a crash coming? I would not bet all of your poker chips on that one. The experts say we are stabilizing, not imploding. Home sales hover near 4.1 million, way below peak. As affordability crawls back into the room, expect improvement, not fireworks. In other words, bring snacks. This might take a while. It is what it is, guys. I'm just here to tell you what's going on. So buyers, I would suggest that, as always, get pre-approved, set your realistic budgets, and be ready for some actual negotiation. That is what we are doing out there in the market. It is the time for negotiation for buyers. Sellers, price like you mean business. flaunt your home's best traits, and work with someone who actually understands the shifting market, not just cheerleads. So if you are waiting for dramatic drops in prices or rates, you might want to just hold on to your seat for just a little bit. But don't panic and don't hit the snooze button either. The market is weird, but there's definitely opportunity there. So if you want real talk and the occasional sarcastic snippet, hit subscribe and stick with me as we navigate this very unpredictable journey. Until next time, stay informed, stay flexible, and remember, sometimes surviving the market is really its own prize. But also, the Federal Reserve's next open market committee meeting will take place over today and tomorrow, Tuesday, September 16th, and Wednesday, September 17th. The key decision on interest rate is expected to be announced at 2 p.m. Eastern Time on September 17th, which is tomorrow, followed by a press conference that is led by the Fed Chair Jerome Powell at 2:30 p.m. So a lot to look forward to. Market consensus really forecasts a likely quarter point cut in the federal funds rate, possibly moving the target range down to about 4 to 4.25%, although a half point cut remains less likely, but still a possible outcome. So the Fed will also release updated economic projections, showing members' views on the expected path of rates through the rest of the year. So we just got to be hopeful that it's going to work out in our favor for everybody, because, it obviously works out in everybody's favor, regardless if you're a buyer or seller. So this meeting tomorrow carries a heightened attention as Wall Street evaluates how the Fed plans to balance slowing job growth with inflation concerns, with broad implications for mortgage rates and overall economic direction. So stay tuned for our update right after the announcement to break down what the Fed's decision means for buyers, sellers, and the market going forward. I look forward to seeing what that is all about and sharing it with you, of course. So thank you so much for joining. It has been a heck of a ride with this market, but we feel very well versed in it and are excited to share what's going on in it so that you can be best informed about your buying and selling journey. All right, we will see you on the next one.